Shalom. First and foremost, I'd like to give all praises and glory and honor to Yahweh, Ba'ashem, Yahweh Shai, Ba'ashem, Wakakadash. Double honors to the elders for preaching his words truthfully and sincerely. And shalom to the Akim, scattered through the four corners of the globe, preaching the word truthfully and sincerely as well, too. And I say shalom to your Akim out there. And this is a sit-down lesson that I want to bring out. And as of March 18, 2023, from the business news category in the financial category, and it reads, dozens of U.S. banks at risk of repeating the SVB, which is a Silicon Valley Bank, what happened almost close to a week ago. Risk of repeating the SVB collapse study shows many of lenders are also sitting on unrealized losses caused by the rapid rise in interest rates. Right, because I believe, this past week, you had like banks, when the SVB of the Central Silicon Valley banks was, collapsing and stuff like that. They kind of felt the effects of that in the markets of Europe, Asia, and the United States, and a lot of banks were kind of, on a standstill because they didn't want to feel the actual collapse of a potential collapse. So the banks kind of hold back, you know what I'm saying? What I'm going to read on, it says many other lenders are also sitting on a unrealized losses caused by the rapid rise in interest rates. And it says, because I believe the Federal Reserve, they're going to have a meeting sometime next week. I'm not for sure in its regards to the current bank that's going on. And I believe they're going to possibly discuss if they're going to continue to raise interest rates as well, too. So I just want to add a note to that. It says nearly 200 American banks face similar risk to those that lead in the implosion of a bankruptcy of Silicon Valley Bank, which is the SVB. According to a paper post this week, the Social Science Research Network of the SVB, a major U.S. lender focused on the tech and startup sectors, was shut down by the regulators last week as a massive deposit overflows. It says in the study of 4 economists from prompt U.S. universities estimating how much the market value asset held by U.S. banks has lost due to the recent interest rate hikes from March 17 to March 6, 2023. From March 7 of 2022 of last year to this year, March 6, 2023, the Fed funds rate rose sharply from 0.08% to 4.57%. And this increase was accomplished by the quantitative tightening. As a result, a long-dated asset similar to those held on bank balance sheets experienced significant value declines during the same period, they wrote. Although higher interest rates can benefit banks by allowing them to lend at a higher rate, many U.S. banks has parked a significant portion of their asset cash in the U.S. Treasury. This was done when the interest rate were at a near zero level. The value of these bonds has now greatly decreased due to the rate hikes. Investors can now sharply purchase newly issued bonds that offer higher interest rate. The decline in the bank's portfolio is unrealized, meaning the value of the security has declined, but the loss is still only on paper. The problem arose when customers requested their deposits back, and their banks are forced to sell their securities at a significant loss in order to pay deposits back. In extreme cases, this can lead to a bank becoming insolvent, or happening with Silicon Valley Bank. The loss of confidence can trigger a bank run. It says the report authority the report authors look into how the amount of U.S. lenders funding that comes for uninsured deposit, the great share more subtlety a bank is to a run. For instance, as SVB, where 92.5% of deposits were uninsured, the deposit outflow caused the bank to collapse in a span of only 2 days. The authors of this study calculated 186 American banks do not have enough assets to pay all customers even if half of uninsured deposits decide to withdraw their money. And it says our calculations suggest that these banks are certainly a potential risk of a run absent other government interventions or recapitalization. Overall, these calculations suggested that recent declines in bank assets values vary significantly, increasing the fragility of the U.S. banking system of ensuring deposit runs. The economists conclude, noting that the number of banks at risk could significantly large uninsured deposit withdrawal cause even small fire sales. It says the SVB, which is Silicon Valley Bank's failure, sent ripples across the entire U.S. bank industry and caused the closure of another lender, Signature Banks. Many other finance institutes have seen their stocks plunge, with the sixth largest Wall Street bank lost around $165 billion in market capitalization, or 13% of their combined value early this week. The ratings agencies the move downgraded its outlook for the U.S. banking system from stable to negative, citing the rapid deteriorating operating environment. So as you see, this is can be a repeat of what happened last week. As it said, dozens of U.S. banks at a risk of repeating a Silicon Valley bank collapse, study shows. This is potentially. So with that, this was just a sit-down lesson of this news article that I read as of March 18, 2023. Business news category in the financial category area. As it says, dozens of U.S. banks at risk of repeating a Silicon Valley bank collapse, study shows. So with that, I would like to give all praises and glory and honor to Yahweh, Bahashem, Yahweh Shai, Bahashem, Bakarkadash. Double honors to the elders for preaching this word truthfully and sincerely, and shalom to the Akim, scattered in the four corners of the globe, preaching the word truthfully and sincerely as well too. And until next time, I will say shalom.